Dear students and working accountants, welcome to my Smart Tally Prime YouTube channel. My name is Baburao from Hyderabad, and before entering to our topic today, an advice to you: if you want to learn Tally Prime, GST, TDS, TCS, everything perfectly and getting very good expert knowledge and becoming expert accountants, please follow and practice all the videos in my channel in the same serial number order I uploaded. Okay, then you will get a very good knowledge, and practice is more important. You will get a good knowledge and you will become expert accountant. And everyone, definitely, without forgetting, please subscribe to my channel if you have not already done. Only once you can subscribe. Okay, and then click the bell icon and select all option. You will get notification for all the videos which I upload in my channel. And share this channel with all of everyone, because anyone who want to learn all these subjects, please share the channel. And every video, watch till the end without skipping. If you skip, you will know the theory only about the topic, and the practical work on the Tally Prime in the later part you will miss and you cannot understand. So watch every video till the end, and after watching, if the video is good, please like my video, and in the bottom in the comment section, please definitely post your comment about the video. Now we went into our topic today. Today our topic is what is ITC and the method of ITC set up against tax liability. See, what is ITC and what is the method of set up? What is meant by set up? See here, when you sell the goods, the goods sale of goods is called output supply. So when you make the output supply, you will collect the tax, that is called output tax. Output GST you will collect. It is to be paid to the government. That's why output supply and the output tax is a liability. It is also called output tax, a liability you have to pay. And when you purchase goods, it is called inward supply, and the tax paid by us is called as input tax. So that input tax will be given back to us, but they will not pay cash. That will be adjusted against the amount collected payable to government. That is the liability payable to the government, that will be adjusted. So adjustment of the input, that is input tax we paid already, it is called input tax credit. We'll get the credit for that. So it is called input tax credit. So the input tax credit is to be adjusted against the liability payable. So as per the GSTR 1, we are showing the sales, that is a liability. So that liability is to be adjusted by the input tax credit. That is, adjustment of input tax credit against the liability is called set off. It is called, adjustment is called set off. So the ITC, input tax credit, which you already paid, input tax credit is to be set off against the liability of the trader. Okay, so this input tax credit as well as the output tax we collected, output tax and input tax, both will consist of three heads. One is IGST, CGST, and SGST. This SGST also includes UTGST also in some cases. In the case of states with assembly, so the SGST is applicable. If there is no assembly, then union territories, they are called as union territories. So these union territories will have UTGST, Union Territories Goods and Services Act. So SGST also means UGST also, UTGST. So IGST, CGST, SGST or UTGST we will have. So the three heads we will have, that is the input tax credit as well as the output tax liability also will consist of these three. So how these are to be adjusted? So there is input ITC is there, IGST is there, CGST is there, and SGST is there. We should not take the total amount and adjust the total amount against the liability. It's not like that. So CGST, IGST, CGST, and SGST are to be adjusted or set off in a particular way. There are some rules under section 49, 49A, 49B, and a section and rule 88A. Under this, the rules are given. The rules are here how the output, the input tax credit will be adjusted against the output tax credit, output tax. And if the input tax is more, so the output is completely, output tax liability will be completely set off, and the balance will be carried forward to next month. And if the liability output tax is more, that is, liability is more than the input tax, after adjusting the total input tax and input tax credit ITC, the excess liability is to be paid in cash. So that how to adjust that or set off that, I will take you. See, first of all, in this case, first of all, we have to take IGST only. First, you have to take IGST. If the IGST there is no balance, then we'll go to the other one. First of all, IGST we have to take, and in this case, this IGST, HGST, and CGST, IGST can give, that is, can adjust against itself, as well as CGST, HGST also it can adjust. Similarly, CG and SGST, they can adjust themselves, and then IGST, that is, CGST can adjust against CGST and then IGST, and HGST also can adjust against SGST and then against IGST. But CGST and SGST, they cannot set off against each other. So SGST cannot set off against CGST, CGST cannot set off against SGST. So IGST can set off against the other three. IGST can set off against the other two also. The other two also can set off against IGST, but the CGST and SGST, they cannot set off each other. So first of all, IGST we will take up. First of all, it has to adjust against itself. That is, it is to be set off against itself. So IGST will be adjusted against IGST first. If there is still balance, then it will go to the CGST and SGST, and the method of adjustment, set off against these two is not in a particular way. It can be done in any order, either only SGST or only CGST or both, and also any order, as well as any proportion, means any amount. So giving more amount to SGST, less amount to CGST, or CGST more amount and SGST less amount, like that, any amount or any order, either only SGST or only CGST or both, anything. So in these two cases, in any order, in any proportion, any amount, you can adjust the available IGST credit, and then it is to be made zero. After making IGST zero, that means adjusting the total amount against all the three, and it is completed, completely exhausted, it is zero, then only we have to go. Still, after adjusting all the three, still there is balance, so that will be carried forward to the next month, and the other two input credits need not be used. Okay, so like this, IGST you have to use first IGST, then CGST and SGST in any order, in any amount, that is any proportion, and then till this is zero. If it is not zero, that's all. We need not go to others, and the balance will be carried forward. If it becomes zero, and then we have to, if it becomes zero and still there is liability, and then in such a case, then we have to go to HGST. We have to go to HGST, and this HGST can set off first against itself. That is, CGST has to set off against CGST first, and if still there is balance, and if it is necessary for IGST, then the balance can be set off against the IGST. So CGST against CGST, and if still there is balance and necessary required, then IGST. But it cannot set off against CGST. CGST cannot adjust against SGST. There is no setting. And then we will go to SGST. SGST will be set off against SGST first, and then, if necessary, against the IGST. But SGST cannot set off against CGST. So these two cannot set off against each other. So IGST to CGST, SGST it can do. CGST can do against CGST and IGST. SGST also against SGST, and then IGST. So CGST against CGST first, IGST against IGST first, SGST against SGST, CGST against CGST. That is, themselves first they have to set off, and then go to others. If necessary, they can adjust against the others. Okay, now we will take up one example. So I have made one Excel sheet. So this is ITC, this is liability. How this ITC will be set off against the liability and everything, and what is the amount payable. So after adjustment, Still, if the amount is payable, what is the cash payable? If it is zero, so no amount is to be paid. And what is the input tax rate ITC? Still there is some balance to be carry forward to the next month. So the sheet I prepared. And in this case, except this, if there is RCM liability, reverse charge mechanism liability. See, I told you already, this reverse charge mechanism liability cannot be, any ITC cannot be adjusted against RCM liability. RCM liability is to be paid, always it is to be paid in cash. So it is to be paid in cash only, no set off. It is to be paid in cash. After paying cash, that amount can be added to the liability, added to the ITC. So that can be taken as ITC, means that can be adjusted along with other ITC. It can be adjusted against the forward charge mechanism liabilities. So here, for example, if 500 rupees ITC, IGST, so it is to be paid in cash only. So in such a case, this 500 rupees can be added to the IGST, that is input tax credit. It can be added. It can be added plus 500 rupees. Plus 500 rupees can be added to this. Okay, like this we can add. If there is the liability is 500 rupees, 500 rupees, and this is not there. So there are two 500 rupees. So we have to pay in cash. All the two 500 rupees, 1000 rupees you have to pay. This GST and CGST that can be added. It will be immediately. It will be added to the existing CGST and SGST. CGST 500, SGST 500 rupees to the other ITC. It can be added. So payment of cash and getting the ITC for other ITC along with other ITC. It is to be done. And one more thing is here. After completely we have to make the adjustment. Set off. So completely it is to be adjusted. This is what we have to do. We have to actually, in the case of this, what you call in the portal itself, automatically it will make the what you call as per the rule. So SGST, IGST, first IGST, then SGST, CGST. What it will do is, so first of all, it will adjust against that is set off against IGST, and whatever the balance is there, whatever the amount of liability for CGST, the balance total it will adjust against CGST. It will not go to SGST. Like this it will do. So in such a case, say after completely in the portal, if you see some either CGST or IGST or SGST, anything, something is to be paid in cash. It will show payment of cash. You have to pay in cash. Still, there will be some ITC balance. So that ITC balance will be carried forward to next year, and the balance to be paid in cash, it is to be paid. So it will show like that sometimes. That's why we can make the changes as per the rules. As per the rules. See here, you see liability as per the section 49, 49A, 40B and 88A ITC. This is ITC. This is liability. So IGST number 1, 2, 3 or 2, 3. This one or this one. First this one, next this one. Or first SGST, next CGST. And CGST, first against CGST, then against IGST. SGST, first against SGST, then against CGST. And SGST, CGST cannot adjust, set off against CGST, cannot adjust against SGST. SGST cannot set off against CGST. This is the thing. And then we will take up some examples. We have to use our convenience as per the convenient we can do. I will take a simple example. See here, for example, I will take number 4 first. I will take number 4, a very simple one. See here, 140, 50, 50 is the ITC. So 1,40,000, 50,000 plus 50,000 is the ITC available. And here 1,50,000, 50,000 is the liability. So 1 lakh plus 50,000 plus 50,000. This is the liability. So totally 2 lakhs payable and IT is available 2 lakh, 50 it is, sorry. So IT is available is 140, 2 lakh 40 and amount to be paid in 2 lakhs. It means only 40 lakhs will be, still there is some balance of the ITC carry forward to next year. So this how you to adjust. First to take the IGST. Take the IGST, adjust against IGST. So total can be adjusted 1 lakh. So it is adjusted. Okay. And now see here, IGST liability is over. Nothing is to be paid. Then still there is a balance. This is the balance. This is the balance of liability. This is the balance of ITC. Okay. So liability is over. And now still there is a balance of 40,000. What the portal will do directly, it will adjust the 40,000 against that any order they can do. So in the portal, it will do 50,000 out of 50, 40,000 will be adjusted against 50,000. So there is still some balance. So from the CGST, it will adjust 10,000. So balance will be 0. That is liability will be 0. This is over. And here nothing is adjusted against this one. All the 50,000 is to be adjusted from the HGST liability. So the liability is 0 and the HGST balance is 0, ITC, and CGST balance, ITC, still there is 40,000. It will be carried forward to next month. But see here, there is GST balance, but HGST balance is not there. So it's not that. But generally, make it equal. In this case, what can we do is, I will make it 0 and 0. See here, 50-50 is there. Here, instead of 40, make it 50-50, 20,000, 20,000. So here, if you make it, so this IGST is over and the balance is completed. IGST is exhausted completely. It is 0. Now here, see, 30-30 is the balance for these two. So it has 50-50 ITC. So CGST 30,000 and come to SG. Be careful. SGST is to be adjusted against SGST. SGST against SGST. CGST against GST. So CGST against CGST and SGST against SGST. So 30,000. So now nothing is payable. Okay. And balance ITC is 40,000. But here the balance will be SGST will be 20,000 and CGST will be, both are equal. So we have to make like this. We have to use our method that we can see. So how to make the adjustments that we can do. Okay. So this is one example. Okay. We will take up another example here. This is a simple example. We will take up one. There is no liability for IGST. One we will take up. There is no ITC in liability. So this we will take up. See here. This you can take up. Okay. So if we take 11th one, see here. I will make 0. I will make this M0. Okay. Okay, I'll make this 0. So take this M. See here. ITC, IGST is 0. Okay. Then IGST is 0. This is 13,22,934. 13,22,934. And this one 11,60,986. And here the liability is 627,298. 627,298, and then in this case 328,742, 328,742, 328,742. So this is the liability, this is the ITC. Okay, now how to set off? So you have to use our method, our brain. See here, first of all, IGST we have to take. There is no IGST ITC, so no question of ITC. Gone. Then we will go to it. We will complete this one. Then and one more thing you remember. See, this is the balance na ITC. This ITC balance means it includes last month balance also. So suppose if last month there is some balance, that balance plus ITC of this month, totally it will take up. The ITC will be including last month balance also. Last month balance plus this month's ITC, that is the total ITC available. For example, there is no ITC balance. Suppose, for example, last month there is some for 10,000. So that 10,000 will be taken. 10,000 plus this month 0. 10,000 plus 0 is 10,000. Like that, this balance will be, this is only for this month. Every month you will pay. The ITC only carried forward. That is why if there is some balance in the last month, that will be carried forward. Plus it will be added to this month ITC. The total will be taken. So now we will take this. See here. Here in this case, how to this one? See here. CGST, it has to adjust itself first. So first of all, the CGST will adjust 328,742. So it is adjusted. So CGST is 0. Now SGST we will take up because SGST has to be adjusted against itself only. 328,742. It is adjusted. You see? See here. CGST against CGST, SGST against CGST. So the liability is, I mean, input tax credit is more than the liability. So it is completely adjusted. So it is completely set off. So the balance is 0. So CGST and SGST liability is 0. Now this is the amount. This amount is to be adjusted. So here we can take 627,298 by 2. So 3,13,649. So 3,13,649 for this. 3,13,649 for this. So this is also become 0. So this is one. First of all, first we adjusted CGST against CGST, SGST against SGST. We completed. Now the excess amount available in these two can be used against the IGST. CGST cannot use against SGST, but CGST can use against IGST. So this one. So this is everything is okay. So balance available is okay. Everything is okay. A liability is 0. But here you see the balance here in the opening itself, there is a difference in the balance. Okay. What is the difference? We can make them equal. How we will take 680, 543 minus 521, 595. So this is the balance. Okay. This is the balance. In this case, so if we take take half. So 79,474. So this is more. So here you claim more here. You claim this amount more here. If you claim more, then this will go down. And if you clear less here, it will increase. So like that, what we do here minus. So here we have to claim more here. So plus 313,649. That means 393,123. So here 393,123. If you take this and here 79,474, 79,474 is the half minus reduce from this. If you reduce from this, it will increase. That balance will increase. 313,649. So 241,175. So 241,175 reduced. See 7,000. Not 241. 1 minute. Not 241. 234. Sorry. 234,175. 234,175. See, the liabilities become 0 and the balance also, both the balances. The balance here in the opening also, there is a difference of more than a lakh difference, isn't it? 1,60,000 difference, 150. Here you see, we made it equal. So for next year, next month, so this CGST and HGST will be carried forward. So next month, see both the balances are there, equal. Total amount is okay. It will not change. But here, we made that, you see, by seeing this, the difference, so if it is more, see here, claim more. So the balance will go down. If the balance is less, so claim less, then the balance will increase. So it is decreased and it is increased. So both are made equal. Okay. So this is, so like that we have to use our thing and we have to see, we have to utilize maximum ITC because our ITC is there, our money. We can utilize more ITC, maximum ITC. If there is no other alternative, definitely you have to pay. Then only we will pay. So if you see the portal, sometimes still there will be balance. That is ITC balance will be there, but still it will show. So you have to pay amount for some ITC, GST or CGST or SGST, something. It will show you have to make the payment, to be paid in cash. Cash, yeah, additional cash required, it will show. That means you have to pay. So it will show payment of cash as well as balance will be there. Why you should keep the balance with the government and pay the money to government? So we have to make adjustments like this and we can avoid payment. If it is not possible to make the complete adjustment, if there is no other alternative, then only we will pay. Okay. So this is the example and I will take up another example. See here. Okay. We will take up another example here. We will take up this example. See here. Here there is no ITC, but here there is no liability. So we will take up this one. This one we will take up. See, 133.21, 133.721, 133.721, 133.721 is the 123.723, 120, 133.721, 65.849, 894, 60, 65.894, 69, 65, sorry, 65, 65.894, and here 65.894 and 64.921, 64.921. This is the liability ITC, and then liability is, so there is no liability for IGST, no liability. 18, sorry, this one, 129.928, both 129.928. So 129.928, 129.928. So this is the liability. For IGST there is no liability, but there is ITC available. Okay, so here IGST no liability, and these two we had to pay 129.928. Okay, in this case, how to make? So here there is no IGST liability, gone. Then we have to go to this, and you take 50% each, 133.721. 133.721, make it 2, make it 50%. So 66,860. So 66,860, 66,861. So this IGST input is completely zero. Now the balance is 63,000, 68, 63,000. So here there is more than the liability. So 63, 68, and then come to SGST, 63,067. So liability is 0 and ITC, IGST is 0. These two, there is some balance. You see, the balance is different. There is some difference. 2,826 minus 1,854. In this case, 972 is the difference. So you make it half. Make it half. So 486. See here, you claim more in this one, CGST, it will reduce. You claim less, it will increase, isn't it? So for that, what you have to do, you have to make already here. Here in this case, it is to be claimed more, 486 more. If you claim, the balance will go down. To claim this more, you have to reduce this. Okay, 486, 66,860 minus 486 means 66,374. So I claim 66,374. And in this one, in this case, it is reduced. Here you have to increase. If you increase it, this will be less. We have to reduce that. So 66,861, and you have to increase this. We have to increase this 482. 482 is it? 482, 972 divided by 2. 486. So 66,861 and minus plus 482. So 67,343. 67,343. See here. 9,826 minus 1,854, 2,826 minus 1,854, 972, 486, 486 it is. So here we have to increase 4 more rupees. We have to increase 4 more rupees, 7 we have to make. You see here. So here 486 we have to increase the claim. So 63,068 decreased here. That means claim CGST will be increased by this one. What is the amount? 486. So in this case, if we take 63,551, 63,551. See here. So this is 551, 554, so I think it is 554. So this is 0. And now 63,067, you reduce 486. So it will be 62,581. 62,581. See here, the income, that is the liability payable in cash is 0. We need not pay anything. And here also the CGST, HGST output, input tax credit is actually, there is difference in the opening balance. Now we made it equal. So here, to make it equal, so this is more the claim, we increased the claim. We increase the claim, we increase the set off, then the balance will go down. So to increase the set off, we decreased this IGST. If we decrease the IGST, HGST, CGST is increased. If we increased the IGST and HGST is decreased. Okay, that's why the balance increased. So now you see, now the total, both the balances, that is the IGST available, ITC available for CGST and HGST became equal, and the IGST is completely exhausted. Then only we will go to CGST and HGST, and cash payment, cash liability it is called, amount to be paid in cash. Cash liability is 0. Still we have 4,680. Still we have ITC carried forward to next month. So like this you have to do. So you see here, you just take the photo and you stop the video at this place. You stop the video and you try other examples. No problem. You try, try all the examples, all these examples, not once, 2, 3 times, 4 times, like that. You make the practice. If you make practice, then you will get it very well. Okay, so this is the topic today. And here, particularly this ITC is a very confusing subject, that actually we have to use it. You have to use our brain, and as per our convenience, we have to make that adjustment. We can, no problem. We can make as per the rules only. First IGST, set off IGST, then CGST, HGST, any manner, any amount. Then go to CGST, first set off CGST, then go to IGST, then SGST, first set off SGST, then go to IGST if required. And if there is any difference, so make the adjustment in the claims. Okay, now it will be okay. This is, many people don't understand. So what they do is, so whatever is done by the portal, they will accept as it is, they will file the return. In such a case, still they will have ITC balance, but they will pay cash. So in such a case, so for next month, one CGST or HGST or one head, in one head, there will be lot of balance. In one head, there will be no nil balance or little balance. Like that, there will be, we have to use the convenience. We have to utilize maximum ITC. We have to avoid cash payment, because still we have our ITC, we paid that is tax paid by us only. So we have to utilize that ITC and avoid or reduce the maximum of the cash liability. So with this, you make practice all these examples. Many times you will get very good knowledge of the ITC. This ITC is the only very confusing in the GST portal. Okay. Even many chartered accountants, auditors, chartered accountants also, they commit mistakes. They will just simply, without making all these things, simply they will accept as it is done by the portal, and they will ask the customer, ask the client to make the payment. They will pay, but still they have lot of this one. See, I will tell you an example. Some time back, I went to one company. They have 6 lakhs input tax credit. They have 6 lakhs input tax credit. The portal is showing, when you are filing 3B, the portal is showing 62,000 rupees cash payment is required. Pay 62,000 rupees showing, but still they have the balance of 62 lakhs. So what I did, I made all the adjustments, not from April to this February, last April to this February, every month, I did not pay a single paisa, only through the adjustments, that is through the set-offs only. If the total liability is set off and no paisa, only except few days, few months, the RCM, it is to be paid in cash only. So except RCM, we did not pay any tax for nearly 10 months. Okay. So like that, we have to make the adjustments. With this, I stop it. You practice this, then only you will get the work. Just if you see the video, you will understand, but you cannot do. Okay. This is the thing. So I wish you practice well and you get more knowledge, become good accountants, and all the best to all the students, all the persons. Okay. Bye. We'll meet in the next video. Bye.